Let's get oriented. I'm Lázaro Ulloa, owner and founder of Ulloa Financial, and this is your weekly recap for Friday, March 13th, 2026. What a difference a week makes. The markets tried to find their footing today after the inflation data came in largely as expected, and for a brief moment, it looked like stocks might stabilize. But that early rally did not hold. As the day unfolded, geopolitical tension and rising oil prices pulled sentiment back, and by the closing bell, the market was back under pressure. The Nasdaq led the decline, falling 206 points or 0.93%. The S&P closed down 40 points or 0.61%. The Dow Jones Industrial Average fell 118 points or 0.25%. And small caps also ended lower, with the Russell 2000 down 0.36%. Now step back and look at the full week. The Dow finished the week down just below 2%. The S&P fell 1.6%. The Nasdaq lost 1.26% and the Russell 2000 dropped almost 1.8%. That tells us this was not just a one-day stumble or problem isolated to one corner of the market. This was a broader retreat with pressure spreading across large caps, small caps, and growth names alike. This is the kind of action that signals a more cautious, risk-off environment. And at the center of all of this concern was oil. The Iran conflict continued to keep heavy pressure on energy markets, with oil prices rising sharply as the Straits of Hormuz remained a major point of concern. That matters because this is not just about higher prices at the pump. This is about the flow and availability of energy throughout one of the world's most important shipping routes. When that kind of supply risk enters the picture, it can affect transportation, manufacturing, inflation expectations, and consumer confidence all at once. In other words, it reaches far beyond the energy sector. While oil took the headlines, a quieter but equally important development came out of Washington. A federal judge quashed the Justice Department subpoenas aimed at Federal Reserve Chair Jerome Powell. That ruling matters because markets depend on the credibility and independence of the Fed. In an already volatile environment, the last thing investors want is uncertainty around whether monetary policy is being politically pressured. So while the decision did not spark a rally on Friday, it did remove a serious layer of institutional risk from the background. So what's the key takeaway for this week? The market still looks unsettled. Today reminded us that even when the data gives investors a reason to breathe, the market can still reverse quickly when bigger risks are hanging overhead. That is why the environment calls for discipline over drama. For next week, I'll be watching one simple question. Do buyers return with enough conviction to broaden participation across the market, or does the cautious tone continue to spread? A stronger market usually shows confidence across multiple sectors. Right now, that kind of broad strength still looks like a work in progress. For investors, this is a good reminder that long-term planning matters most when short-term headlines are the loudest. Stay oriented, my friends, and elevate your legacy.